From Apple's latest update for cryptos, including Dogecoin and massive price predictions amid this recent market sell-off to all the latest data and updates, some important things are happening right now, so let's talk about it. So first of all, we are now seeing that the crypto market is back in the green after the recent sell-off. We can see here that Bitcoin is back above the 41K level, Ethereum is back above the 3K level, and other altcoins like Doge have also started to trend during the last 24 hours. It appears that the fear sentiment is now fading away, and this is why we are now seeing that cryptos are showing some positive momentum. Now as the market is looking good, it is important to see why there was a massive correction. So we are now seeing that popular crypto analyst Invest Answers is saying that the current bearish price action is a response to three things. First, he cites data from the analytics firm CryptoQuant that shows a recent spike in Bitcoin miner outflow. He explains that these miners are desperate to raise cash to buy rigs so they can mine more Bitcoin, and that's the whole endgame here. He also notes that Bitcoin is suffering from cascading liquidations that match totals hit most recently in late February. And the third factor pushing down the crypto market is fear of the yield curve. Typically, short-term bond yields should be less than the long-term bond yields, and if they're not, things are broken. Meanwhile, the head of a major American hedge fund thinks the crashes and pumps of Bitcoin and cryptos will be less volatile going forward. In a new blog post, Pantera Capital CEO Dan Morehead says more institutional ownership of BTC and a higher Bitcoin market value will moderate its price swings. He stated that while we've had two -80% bear markets already, those are a thing of our primordial past. Future bear markets will be shallower. The previous two have been -61 and -54%. Morehead argues that the current bear market is finished and Bitcoin and cryptos have moved on to a new rally cycle. The next 6 to 12 months are likely to see a massive rally as investors flee stock, bond, and real estate markets for blockchain. So this is good news for cryptos, and it appears that things are going to get better from here. And now, let's come to the big update for Dogecoin and cryptos coming from the tech giant Apple. So Apple has recently posted a job listing for an individual who would become part of the product legal group in New York and support identity initiatives for the Apple Pay and Wallet team. In the job description, the firm says that the employee would be responsible for supporting and advising a wide variety of matters relating to Apple Pay and Wallet. This includes feature and technology research and development, licensing, intellectual property, and regulatory proposals and compliance. The point to note here is that this job advertisement signals Apple's growing interest in the blockchain and digital asset space. The company has been rumored to be working on crypto-related initiatives. Another important thing is that in May last year, Apple posted a job opening for an alternative payments partnership, with the candidate requiring more than 5 years of experience with cryptos. CEO Tim Cook has said that crypto is something that the company is looking at, but has so far added little detail. And in September 2019, Apple Pay's VP Jennifer Bailey said the company was watching crypto and strongly believes it has interesting long-term potential. Then in February 2020, the company hired Jeff Bronikowski, Warner Music's former head of technology innovation, who was working on a number of the blockchain efforts to create digital assets using a public blockchain called Flow. The company has also hinted at a foray into the metaverse, which would fit well with any digital asset plans. It joins several major tech firms, including Microsoft and Meta, in vying for space. Meanwhile, we also know that Apple has announced plans to launch Tap to Pay for iPhone, a new feature that can turn smartphones into POS devices for businesses and retailers. It has been revealed that Apple is about to introduce a crypto payment feature on the iPhone. The announcement explains that with the Tap to Pay feature, merchants who own an iPhone can make contactless payments using their mobile device as a POS device thanks to NFC technology. According to Apple, the Tap to Pay feature will expand support for Apple Pay, credit cards, contactless debit cards, and other digital wallets. This essentially means that customers using Coinbase Card, Crypto.com Visa Card, or similar payment cards can use their electronic device's cash account to make payments via Tap to Pay, unless Apple imposes a direct barrier. While Apple announced Stripe, the first fintech platform to offer tap to pay on iPhone, the company has also clarified that more payment platforms and apps will be integrated later this year. All in all, we are now seeing that Apple is showing more and more interest in cryptos, and we have been seeing a lot of rumors and hints during the past few weeks. So if anything of this is actually true, then there is no doubt that Apple is going to accept cryptos, and this is going to be one of the best things for the overall industry. Cryptos like Dogecoin and Bitcoin will be getting a lot of benefits from it, and this is why I think that this is going to be a huge development. And now let's come to Dogecoin's current price movements and see where it is headed from here. So Dogecoin is currently moving above the 14 cents mark after surging by almost 5% during the last 24 hours. It appears that the recent sell-off pressure on it is now fading away and things have started to get back on the track. And considering all this positive news, we can expect more growth for Doge in the coming days. And with that being said, let's come to Bitcoin for a minute. So after the recent crash, Bitcoin held on to fresh gains in the last 24 hours after a rebound in line with the recent Wall Street Open flipped the mood. Bitcoin is still trading above 41K, having reclaimed the 40K mark during the move higher. And seeing this, popular trader Crypto Ed said that so far so good. I expected a move to 41K, but I doubt about going for an extra leg down to the green box. And as per analyst Tech Dev, the lower the time preference, the less cause for panic year to year. He said that Bitcoin had more than a passing resemblance to traditional market behavior, even after dropping over 50% from November's all-time highs. As per Tech Dev, times change. Assets change. Macro aggregate human behavior usually doesn't. All in all, Bitcoin's stock correlation is nonetheless a cause for concern for some, with a drawdown tip to impact price significantly. Meanwhile, crypto strategist Cred is saying that momentum is on the side of the bears after Bitcoin failed to sustain its rally despite a flurry of public buying. However, Cred says that all is not lost for bulls, as he says Bitcoin is quickly approaching a key support level that has kept Bitcoin afloat for most of 2022. Well, two things are bullish. One is either reaching support at 36K or the range low where the expected value of being long goes up and the risk-reward of long setups becomes more definable and attractive. In another scenario, Cred says bulls can assert their dominance if they manage to reclaim 44K and flip it into support. According to Cred, a move above resistance at 44K can push Bitcoin above 50K. Moving on, we are now seeing that Raoul Pal, the founder and CEO of Real Vision and global macro investor, believes the crypto market has found its bottom and that new upside momentum is likely. The Real Vision CEO made his comments during an interview with Leah Halpern, with his outlook coming at a time Bitcoin and the rest of crypto is looking to bounce after a bout of fresh declines over the past few days. And on the other hand, crypto analyst Dave the Wave, who called the May 2021 crypto market collapse, says there's now a case to be made for Bitcoin to rally its way to the 135K level. Dave the Wave says that based on one theory, Bitcoin could top out roughly 229% above current price levels about a year from now. By drawing straight, long-term trend lines through each Bitcoin bull cycle, Dave the Wave identifies each cycle's bottom, top, and bear market bottom. Based on a hypothesis, the analyst projects that Bitcoin slowly grinds up to about 135K by early to late 2023. According to Dave the Wave, if Bitcoin ends up collapsing, then Bitcoin can find support at the bottom of a logarithmic growth curve down near 20K before rallying once again. And now, we are seeing another update from Tech Dev. And he is theorizing that the latest Bitcoin correction could be part of a longer-term pattern that precedes major price appreciation. Tech Dev revealed a chart bearing striking similarities between the Dow Jones Industrial Average in 1991 and Bitcoin today. Both charts show price rallying, then collapsing below the 200-day moving average, and then making one failed attempt to get above the 100-day moving average. After the failed attempt to get above the 100-day moving average, the Dow Jones then made a surprise recovery and blasted through the 200-day moving average at the beginning of 1991 and continued to appreciate for most of the year. The latter part of the pattern hasn't yet played out for Bitcoin, which could imply imminent Bitcoin rallies. The analyst also points out that both the Bitcoin and DJI charts appear to be emulating a pattern known as the sentiment cycle. So this is a bullish thesis for Bitcoin and things appear to be very positive for it. And now coming back to Dogecoin, we have just seen some positive news for it, and we have also seen that its price is rising. So we can expect more growth from here. In any case, what are your thoughts on this? Let me know in the comments section below.